Good afternoon, everyone. Paul Duncan here with GammaEdge. It is Saturday, the 12th of March. Wanted to give you a quick overview of some of the back testing that we're doing and some of the latest results on the scans that we have available in the Discord. Periodically, we'll do this just to keep making sure everything is still functioning. As you know, back tests are not necessarily an indicator of future tests, so we want to make sure that the train stays on the rails, and one way to do that is to periodically look at these back tests. When you take a look at the back tests, even though we've got the entire CBOE weekly data set available to us, we're really only looking at the SPI, the Qs, and the IWM for the tests. There's a lot of reasons for this, and feel free to contact me directly if you want to talk about back testing methodology. The takeaway is this, though. Stocks change, but typically the SPI, the Qs, and the IWM hold their constituents pretty tightly, and their behaviors pretty predictable over the years. So we don't want a bias introduced by testing stocks. We certainly can do that, and it has advantages in certain areas, but for the benchmark tests, we're staying with the index ETFs. All the criteria for these tests are available in our Discord in the Gamma Scans channel, so if you're a member, you know how to come over and do that. In terms of the leaderboard, here's what your takeaway. If you go no further in the presentation here, this is what you should know. So all the scans are showing some measurable upside. That even includes the baseline, which is basically just buy the SPI, Q, and IWM, hold it for 21 days, and rinse, repeat. The GammaUp scan continues to lead the overall results. I think that's pretty important. It was back tested to show really, really good results when we found it, and it's still continuing to show really good outperformance. ChangeUp and GEX to COI are also showing really good behavioral results here. The table that you see here is a summary. We rank them in a number of different things. We distill it down to mean, the median, and the standard deviation. There are a lot of other metrics that we use in the evaluation. They're not posted here, but suffice to say the GammaUp per trade for the 21 days, again, stock only, you could leverage this with options, of course, are showing a little over 2% mean, a little over 2% median, and the standard deviation very, very tight at 2.8%. So we're really pleased with that. The baseline is, you can see 1.2%, 1.6% median, and a much wider standard deviation. So it just gives you a pretty good idea of where things sit. Digging in a little bit, when we take a look at the baseline, again, using the SPI, the Qs, and the IWM, you can see all of these will have some form of distribution. We've got about 9.5 years of trades out here. This particular one resulted in about 1,200 observations, so statistically relevant. The basic methodology is to buy and 21 days later close the position and then rinse repeat for the period. Doesn't matter, no other timing signals involved in here. And what you can see here is that the 50 percentile on this distribution is to the right of the zero line, and when that occurs, you typically have an edge to whatever you're trying to look at here. The mean and the median are not exactly the same, so there's a little bit of skew in here. That's okay. You can see the tails are fat in this. We have a little bit more downside in this methodology for the baseline than you have in the upside, and that's going to give a little bit of downward skew. So that's really the overall format that you're going to see for the distribution. Now we also have another test here called the probability of touch. The probability of touch really is testing whether it'll hit a profit or a loss target anytime within a certain number of days. So across the top here, you've got these columns, 2 through 21, and then you've got gains over here on the as the rows of the table here, gains and losses. And what I do here is basically I first take a look at where the first 50% trade is, where we go from green to orange, the 50% boundary, and I bring that back, and that defines this range, which happens to be 3 to 3.5%. This is pretty common for all of these tests. And then I mirror that down here on the loss side, and then you can see there's an asymmetry between these two. The chances or the probability of touching 50% of hitting 3% within 21 days is shown here, whereas if you look at the -3%, that's a much lower probability. And so basically we form what you see here at circle 1, circle 2, circle 3 then becomes the range that we would expect to see for a downside move. And you can see that in this particular case, the set of numbers at circle 3 and the set of numbers at circle 4 basically show that there is an upside bias here. We have a higher probability, 50-50 coin toss, of hitting 3 to 3.5% after 21 days and not as much of a downside. There's another component here that we've added in here. This circle 5 basically shows that there's a greater likelihood of actually starting off in the red, and then after some period of time, we transition to actually having an upside bias. The reason that this occurs is some of our scans are forward-looking. Because we know there's an option expiration coming up, we're able to take advantage of that knowledge and do some things in the future. And when we detect that a potential change could occur, several days earlier before that expiry actually kicks in, and then that gives a delayed response. It's almost like a crystal ball, or we look at it as a crystal ball. So basically, the takeaway from this type of probability of touch test is this. The basic question is, after n days, am I more likely to have a higher or lower specific value? So in this particular case, we would conclude for the baseline that we have a higher probability of being in the 3 to 3.5 range after 21 days than we do in the -3 to -3.5 range. And that's the way we interpret this going forward for the rest of these tests. ChangeUp is one of the key scans that we have. The ChangeUp scan, again, the criteria is in the GammaEdge Discord. GammaEdge Discord. I'm not going to discuss it here, but you can see that nice characteristic 50 percentiles on the right side of the line. We drop it on down, you can see what the numbers are. So we do have a long-term positive edge to all of these. You've got a little bit more of a tail on the left side, which is a loss side, than we have on the right side, but just be aware, nice tight distribution, looks pretty good. The probability of touching, again, it's that 3 to 2.5 range here, 2.5 to 3 range here, and you can see the probability of touching is on the upside, 57 to 47 range here, 37 to 29. So we have a greater likelihood of sometime in the 21 days of hitting 2.5 to 3% than we have falling 2.5 to 3%. Much lower likelihood that occurs right here. GammaUp, which I said earlier is one of our more favorite scans. It actually occurs less frequently because we are just using the SPI, the Qs, and the IWM. Fewer observations because it is a tighter type of scan. It needs a specific criteria, has a much higher probability, or not probability, a much higher mean and median, as you can see here. The key to take away, though, is this 0.5 distribution level is still up here. It's almost at 2%, very nice tight level up here. Not as tight on the distribution. We understand that, and that is in part because of the few number of observations, but again, this is over a 9-year period. When we see these type of scans, we want to take them. They have a high probability of turning out. In fact, I think the probability of profit on this is well over 78%. So this is actually a fairly good scan that we've had good luck with. The probability of touching, again, just continuing on a theme, we're between 3 and 3.5% on the various ranges. You can see the upside range is fairly good. Low side range, very, very low probability of hitting that same. So there is a natural upward bias to what you're seeing here. Again, high probability trade here. You can also see, though, and this is fairly important, that the number of days where it starts off in a kind of a lossy scenario is limited, and then it converts over to where you start having a higher probability of having a profit as the days march out here. Again, fewer observations here, but nevertheless, it's something to pay attention to. And as we move forward here, if we see this scan, we certainly will announce it. Another one is our positive GEX to COI. This is where we have positive gamma exposure actually advancing, predicted to advance upwards towards call open interest. This is a fairly interesting scan because if you're in an expanding market, the march upward of that gamma can give us some view that the gamma is following up towards where everyone is placing their chips up at the call open interest, and that's a natural progression where we start seeing that march up week over week. You can see a very, very nice distribution in these returns, 20% upside, lesser on the downside, so we've got some bias to the upside in terms of the tails. So some fairly wide tails, good distribution. You can see a fairly tight mean and median up here. Again, a long-term positive edge to this scan. Continuing on the same theme, 3.5 range here picked out, 50 percentile right here, tracking it on back. You can see fairly good upside, chance of upside or probability of touching on the upside. On the downside here, less. So there is a skewness that occurs with time, and you can see where the break point is between 7 and 8 days. Again, this is because this is a forward-looking strategy, and it's looking at what's happening with the next options expiration date. Close put reversal. Again, this is a low number of observations. We only have 127 of these over the last 9 years. This one has actually changed behavior a little bit since we last tested it. The testing methodology basically has now been harmonized across all of these. And what this is basically telling us, although we have a long-term edge here, the low number makes this a little difficult to trade. Another thing that when we start really looking at the probability of touching here, what we're seeing is we're seeing an extension of the days where this could actually be a lossy type of probability of play out here, where we actually could out to 13 days actually be achieving some of the lower numbers. Now the losses are not as significant as the previous trades, but the fact is that this is being pushed out to the right makes this a little more problematic, and we're going to continue to evaluate this strategy and see if we can tighten it up a little bit and improve on the overall numbers. Nevertheless, you can see where we're ending here, the 50% coin toss area. Again, 2 to 2.5%. You're out here at 21 days. And then subsequently, you're just a little bit less than a coin toss out here at 21 days. So again, this is making this a little bit more tenuous to trade. So in summary, I just want to highlight again the GammaUp scan is really testing very, very well. ChangeUp and GEX to COI are next in play, having the equivalent scores, and you can see how they all rank out against the baseline. Baseline coming in at what I would consider a distant fourth here. And then this close put reversal, which we just covered. We may end up having to change the overall structure of that going forward. We'll focus on that. We're also, just in summary, we're also looking at downside strategies. All of these strategies are upside strategies, and we're in a pretty difficult market climate, and our timing models, as you guys have gleaned, most likely are pointing us to a longer term downside. We want to create some scans that take advantage of negative gamma and negative exposure, and see if we can repeatedly get those in front of you. So that's all I got for now. You're welcome to come and join us here at www.GammaEdge.us. That'll take you to a Discord sign-up page. You get 14 days free trial to kick the tires and all the tools turned on, and we've got a great group there to both in the voice and as well as throughout the different channels. I would urge everyone to come and be interactive. You'll learn a lot, and we'll learn a lot from you. And again, you can follow us, of course, on Twitter at GammaEdges with an S. And if you're looking at this on YouTube, certainly would like you to like it and leave a comment if warranted. Thanks, everyone. Make it a great weekend.